Hello, everybody, and welcome to the Brody Show. Now, in today's show, we're going to be talking about insurance. Now, you may be saying, hold up. Insurance? Insurance is boring as f. And all I got to say to you, my friend, is yeah, it is. However, sometimes it's the most boring things that will cost us or save us the most money. And that's what we're going to learn about in this insurance series, is how it can cost us money and how it can save us money. Now, that still can make it somewhat boring, and I admit that. So what is something else that we can do? Well, I've been thinking about, what's a good way to solve this dilemma of making something that's boring, not boring. And the only thing that I can think about is merging it with something that is definitely not boring. And that would be Grand Theft Auto. So, using Grand Theft Auto throughout this insurance series, we're gonna, use it sometimes to explain different factors of insurance. Now, one good way to start learning about insurance is going very broad, learning about, the broad scales of insurance, and then going a little bit more specific. So we're going to have one topic today in regards to learning about insurance. Now, there's 3 different types of insurance, approximately. So there's 3 different types of insurance, really. There's going to be your home insurance. There's going to be life insurance. Watch out! And then there's going to be auto insurance. Now, auto insurance is going to be the one that we're going to be focusing on today. And I've actually been a claims adjuster for auto insurance as well as property insurance and done a lot of studies on life insurance. So I've definitely had a lot of education within these current fields and also professional experience. So that'll help me explain, especially from a professional standpoint, as to what insurance is and how it applies. Now, today, like I stated, we're going to be talking about auto insurance, and specifically we're going to be talking about something that could save you a lot of money, and that would be your deductible. Now, what is a deductible? A deductible is essentially whenever you get in an accident, whether it be with another car or you go in a ditch, you hit a house, whatever it is, the deductible is what you pay first to fix your car, and then whatever is above that said dollar amount, your insurance would cover. So for example, if your deductible is $500, you're going to spend $500 in order to fix the car, and then your insurance is going to pay for whatever is above that. Now, if it's below the deductible, then you're responsible for that. Now, one way to save money, or it could potentially cost you more money, whenever you're making a policy or taking a policy out, that deductible is going to be a huge influence about what your monthly premiums are. If you have a really low deductible, then your premium is going to be pretty high. If you have a really high deductible, so $1,000, $1,500, $2,000, then you may actually have a pretty low premium. But if you have a really crappy car, I wouldn't suggest doing a $2,000 deductible when your deductible is probably worth more than your car. But either way, so that is what a deductible is. And I hate to break it to you because I've gotten this so many times. I've gotten so many people say, I'm not at fault. I don't have to pay my deductible. Yes, you do. So your deductible is something that you agree to pay whenever you take out the policy, regardless of who's at fault for the accident. Now, it is possible, if you're not at fault for the accident, that your insurance could get that deductible back for you. Or you can try to go through the other person's insurance, and then there's no deductible associated with that. So that is one thing that I would definitely say that could definitely save you money. Look at your premium, look at your policy, see what your deductible is. Ask your agent, if I raise my deductible, what's going to happen to my premiums? And that's what I would definitely say. Whenever you look at your savings account, make sure you at least have the amount of all the deductibles that you have. So you're going to have a deductible for your homeowners, you're going to have a deductible for your auto insurance. So make sure if you have $1,000 deductible between them two, make sure you have $1,000 in a savings account. That way, if your car and home, something happens to them, you can pay for your deductible. That is definitely by far one of the best ways to save for money. I know a lot of people are going to say, save 3 to 6 months, which is good. You should save 3 to 6 months' salary. However, I would say even before that, make sure that you have saved all the value of your deductibles. And then that way, you're definitely covered if something happens. So I would definitely say deductible is something to really look at. Go home, go look at your policies. Please tell me you have your policy. Go look at your policies, see what your deductible is, and then once you have that, start saving for it. Start asking your agent for it. If you have any questions about what a deductible is, maybe more explanation in another video as to a deductible, let me know. And like I stated, today was a little light on the Grand Theft Auto. That's fine, but it will definitely come in a little bit heavier once we start talking about liability. But today I definitely wanted to talk about something that I got probably one of the most amount of questions on while I was working as a claims adjuster in auto. And that would be just about your deductible. So, like I said, save for your deductible. Make sure that you have in your bank account as much as all your deductibles combined. If you have any questions or you have a specific topic that you'd like me to talk about in insurance, whether it be auto, home, or life, let me know. Put it in the comments. If you have any questions about the deductible, let me know. And I'll see you guys in the next video.